This is the weekly review for the week of November 28th to December 2nd, as well as this week's Sunday preparation. So, coming into the week, I was initially bullish. So this was Monday's candle because we've been respecting bullish PD arrays on the daily chart, the order blocks and the fair value gaps. I was looking at this daily fair value gap right here, um, and I marked out the range low from that daily low to that daily high, and I was looking for price to retrace into a discount, and then end up trading higher. So coming to Monday's price action, we already ended up dipping into a discount prior to New York session, slightly into a discount here. And we had a bearish setup form off London high here. Now, I wasn't really too sure or too confident in taking this setup. Obviously, in hindsight, um, it did play out. Um, but I first started looking at the charts because we were just in consolidation here early New York. 9:30, we had this big initial move up, and I was wondering if this was going to be a Judas or what was this going to be. We didn't take out any liquidity or have a SMT here, so I wasn't comfortable on like longing this. But I was noting that we did dip into a slight discount, and I didn't know if we were going to go higher or not. Obviously, eventually we had a shift in market structure, and we took or we returned to premium in this multiple time frame inefficiency and hit 1.3R. And then in lunch session, we got an institutional order flow entry drill entry that also ended up hitting 1.3R. We had a SMT with London low, but there was no bullish setup here. But regardless, the entry for the institutional order flow entry drill was outside of the AM session. Um, we shouldn't be entering trades after 11:30, so regardless, you wouldn't be able to enter into this one. Um, so I did miss or skip rather because I did see this live, but I just was not confident enough to take this. Um, Obviously, looking back in hindsight on the week, this was a pretty clear entry because if we just take a look at the weekly range, um, we had a pretty classic buy week where we formed the low of the week on Tuesday, high of the week on Thursday, and then Friday retraces, right? So obviously this looks super clear um, in hindsight, but in the moment I just was not too sure to take this trade or not. And coming into the PM session, I was continue was continuing to look for shorts because I saw price respecting these bearish PD arrays on the low time frame. So on this displacement down here, I was potentially looking for institutional order flow entry drill, but we never got up into premium here. And pretty much there was nothing else on the PM session. We just drifted lower with no retracements into premium. So Monday really only had this one clean entry setup. Then coming into Tuesday in my journal, I noted that my bias kind of switched to either bullish or bearish. I wasn't too sure because now we formed this H1 fair value gap here. and prior to the New York session, we had this high formed in London, displacement down. So I was just watching to see what price action did. There was really nothing notable here. I was looking at this displacement down and the retracement into premium here, but there was no failure swing prior to this fair value gap forming, no raid or failure swing. So that's why I didn't see this as an entry here. And then we also ended up having a bullish SMT with previous day's low all in here, all of these lows here. We had this displacement up. I was watching this fair value gap, but there was just not enough displacement to the upside. That ended up, that call of not entering here ended up being correct because we ended up coming back down. And then I was watching this displacement up, but there was no fair value gap again in discount here. So I pretty much did nothing all through this. And then we got this failure swing with these equal highs. So all of the indices had these equal highs. So even though this wasn't like a session high or anything, I still felt that these equal highs were pretty significant. It was triple equal highs here. And we had a failure swing displacement down. So here I started getting interested in potentially looking for shorts. And this gray box here is just a daily bullish order block. So I was initially looking for some type of low time frame raid because the range of this fair value gap was quite large. So I didn't just want to short this and premium and put a stop loss like above here because it would have to move a large amount of points. So I was looking for a lower time frame raid, potentially of like the lunch high, to form a lower time frame setup on M5 or maybe M4, M3, and then try to get 1.3R there. But nothing really set up. We just ended up consolidating. I noted this bearish SMT with lunch high, but no displacement down, no fair value gap. I noted a bullish SMT here, and then this displacement up, and we also had a SMT with previous week's low. But then we basically formed both bullish and bearish fair value gaps. So at this point here, I didn't really know what was going on. I didn't know if this was going to be a Judas break market structure down and then short, or bullish break in market structure up, return to the bullish fair value gap and continue up. So pretty much at this point here, what is this, like 2:30-ish, I just called it quits for the day because I didn't really know what the heck was going on. So that was pretty much the end of the day for Tuesday. There was nothing clear for me. So coming into Wednesday, prior to Wednesday's trading, I noted how this was obviously the range I was looking at, return into discount here and then go up. I noted how this fair value gap got traded or closed below, and that got me leaning even more bearish. So I was kind of switching my bias in the middle of the week. Coming into the week, I was bullish, but I was looking at all of this evidence, this daily closure below the fair value gap, that got me leaning more bearish. I noted in my journal that if we closed below this daily order block, that would kind of solidify my bearish bias. So I was watching that. But here on the daily time frame, right, we closed below that fair value gap, and then on the 1 hour and 4 hour, we were respecting this H1, H4 fair value gap. So I was kind of anticipating price potentially on Wednesday to break this daily order block here, which is why coming into Wednesday I was looking for shorts, and they did play out. We had a very clean setup on Wednesday where we had a SMT with London high, clear displacement down here, breaking market structure, came back up into the breaker, also above the 12 a.m. opening price, so into a premium relative to the daily range, but also a premium relative to this displacement range. Multiple time frame inefficiency, got the 1.3R here, and I was pretty confident at this point on the bearish bias. So I was thinking, man, I should hold this until Wednesday low. And why are the executions are not showing up? Oh well. But I ended up just sticking to the rules and taking profit at 1.3R. And then I also noted the institutional order flow entry drill. Now this one didn't end up hitting take profit. It got slightly, like a couple points away, and then reversed and would have been stopped out, but I didn't enter in on the institutional order flow entry drill. But pretty much coming into the PM session, everything was looking bearish. And I was looking at this displacement down, and in my mind, I kind of wanted to short this, but I restricted myself from doing so because there was really no setup here, and that kind of saved me from this turn of events here with the Fed Powell speech, which is what gave us this huge displacement up. And this was obviously the displacement that solidified this daily order block here in gray being respected. So all of these bearish setups, the one from Monday and this one today, was just forming the low of the week on Tuesday, and then Wednesday US 30 had the low of the week because we had this should just delete this for now. We had a bullish SMT. So Tuesday we had a bullish SMT with previous week's low with NASDAQ, and then on Wednesday we had a bullish SMT failure swing with Tuesday's low with US 30. So we had those two bullish SMTs, and then the news hit, and we were off to the races to the upside. I did note this multiple time frame inefficiency here, but there was really nothing super convincing for me to long this. We did have a short term. Actually, I don't even think that any of these are swing highs. Yeah, none of these are swing highs anyway. So there wasn't even a shift in market structure here. So this wasn't something you could capitalize on. I just noted the fair value gaps here. But yeah, that was pretty much it for Wednesday. Very clean short setup, but then a turn of events with the Fed Powell speech hitting, and the draw on liquidity ended up being these relative equal highs up here. Let's take these off. the relative equal highs from previous week's high. So this was previous week's high here, and then we had equal highs with the week before that. So that was what the drawn liquidity was here. We moved aggressively toward that and took those highs. So coming into Thursday, after I saw this huge expansion up, coming up into this bearish daily order block, I was kind of pretty sold on the bullish bias now. And coming into Thursday, I was anticipating to look for some shorts down into this low resistance liquidity run. If in the New York session we hadn't retraced, or if prior to the New York session we hadn't retraced significantly down into this fair value gap, multiple fair value gaps down here, I was going to look for a short in the New York session to target down into here, right? Because after expansion, we should have some sort of retracement down, also consolidation. So it was both of those things. I was anticipating Thursday to be a slight retracement down into here, but also consolidation because we had this huge move up. But I wasn't anticipating price to really move up any higher because we had this low resistance liquidity run here. So price should be drawn down into this first before moving up higher. So that's why I was looking for bearish setups coming into Thursday. And that ended up being the right thing to do. We had a raid of previous day's high, no SMT with it, but we did have a low time frame SMT here with these two highs. Now, US 500 didn't form a setup here. US 30 did form a very clean setup. So US 30, previous day's high, we had that SMT here, broke market structure, shift in market structure, break in market structure, and returned and had this the failure swing SMT, came up into premium, multiple time frame inefficiency, down into the low resistance liquidity run. But US 500 did not have that setup form. So it was only US 30 you could have capitalized on. And then coming into the PM session, I was looking for a potential short in this multiple time frame inefficiency. I didn't want to just directly short in here with a stop loss above here because the range of this fair value gap was so wide. You know, you would have had to have like a 20 plus, almost 30 pip stop. And because I was also anticipating consolidation due to the big expansion on Wednesday, I knew that price wasn't going to move the 30 plus pips that would be required to hit 1.3R from just shorting this huge fair value gap in and of itself. So that's why I was looking for a lower time frame raid and SMT. Now we did end up getting that. We had a raid with this short-term high here with the SMT. Nice displacement down, and we did just hit 1.3R, but I didn't end up taking this setup because even though this displacement down was relatively significant in terms of the size of the candle, it didn't really break any of this consolidation. So I just kind of viewed this as continual consolidation, which is what ended up happening. So I'm not sure if this setup hitting TP at 1.3R was just kind of lucky or what, but I just noted it, but I didn't end up taking it live because I just figured that this was just going to continue consolidating since this didn't have a real, if we probably broke this low, I would have been much more confident in terms of getting in the trade. But even though we had this big candle displacement down, it still looks like relative consolidation, relative to what price is doing here, which is why I ended up skipping on the trade. but I still noted it in my journal. So that was pretty much it for Thursday. Really no opportunities on S&P. US 30 was again a beautiful trade. If this happened on S&P, I would have taken this. This is exactly what I was looking for. And then coming into Friday was NFP, so I was pretty much done for the week, because I was anticipating that price wasn't really going to set up anything, and ICT says not to trade NFP anyway. And prior to NFP, I really wasn't seeing much, and after NFP hit, I kind of noticed that we respected the previous day's setup. So I kind of had a myopic vision looking at NFP because I was just looking at the price action of the day, like starting from 12 a.m. on, and usually that's just consolidation. But if I look at the weekly range, the bigger picture, we see that this fair value gap here, which is the one that I was looking to short on on Thursday, but I didn't want to just directly short here because the range was so large. That ended up getting respected, right? This was the setup from Thursday, raid, low time frame SMT, breaking market structure down. We ended up spending a lot of time in this fair value gap, but then NFP sent it down. So it respected that. So it would have hit 1.3R. Probably not something we should be taking, but I just noted it in my journal to see that NFP did end up respecting this setup, which is nice, and then targeting previous day's low. And then it's also nice to see that we ended up coming back into this. We dug deeper into this low resistance liquidity run from the PM session on Wednesday, but we also ended up rebalancing this gap opening that we had on Sunday and Monday, right? So at some video in the mentorship, ICT talked about the gap, how it had to offer like buy side and sell side. So there was no price action delivered here. And then here we offered buy side, and then we came down and we offered sell side to it. So that was just something interesting that I noted in my journal. But that was pretty much it for the week. Monday and Wednesday, those two short setups were really the only clear things that I noted in my journal. And then just an additional note that I put in my journal was ICT tweeted to mark out these equal lows and these equal highs prior to NFP. And after NFP dug down into that low resistance liquidity run, we ended up trading back up, having an institutional order flow entry drill, and then coming all the way back up to take out the buy stops above these equal highs that anyone who was short during NFP would have put their stop loss up there. So that's just something that I noted, but I don't think that would have been reasonable to trade it, according to ICT at least. So coming into next week, just clean up this chart a little bit. I'm still going to be bullish coming into next week because we've now still respected the daily bullish order block. I do note that we have these relative equal lows down here. So that's just one thing to note. We respected the bullish order block. Fed Powell news up. Now we return back into this fair value gap, so I think that we should continue trading up and most likely violate this daily order block. And I think September's high is really going to be on the menu. I think we're definitely going to be taking that now, considering for the past weeks we've just been respecting these daily order blocks and continuing up. So the only liquidity left, I don't think that previous week's low should be violated. So these equal lows, I don't think they should be touched yet. And that September high is potentially going to be the drawn liquidity. I think that we're going to definitely end up taking previous week's high. I'm not sure if we're going to end up digging down deeper into this fair value gap here. If we because we already came into discount of this daily range, so I'm not sure if it's going to be necessary for price to come down, take this sell side, and then move up. But we have pretty light news this week. Monday and Friday really being the only weeks with high impact news, and then Thursday we have some medium impact news. So I think this is definitely going to be a slower week. No crazy moves, and the crazy moves are going to be next week, the 12th to the 16th. That's when we have insane news, CPI, FOMC rates, pretty much high impact news every single day. So next week, the 12th, or next week, I think that's going to be the real crazy week, and potentially that's when we could take, I think, September high and then maybe continue bearish. But that's just a guess for me right now. But right now, coming into Monday, I'm going to be focused on trying to look for a long setup to target previous week's high. So yeah, we'll see what ends up happening. And then quick note for DXY, we did finally end up taking the 40 and 60-day low here. We never came back up into the premium fair value gap as I was anticipating here. So we just ended up coming up into this daily fair value gap, and potentially this sell side here. Based on what ICT says about the IPTA data range, because the 40 and 60-day low has been taken, I think it's reasonable to anticipate some type of reversal that's upcoming, which is why for the week of the 12th to the 16th, I'm thinking we could take this high and then go lower, and then DXY can reverse here. But we'll wait for this week to play out to see what ends up happening. But yeah, we'll see what ends up happening.